Welcome, fact finders, to G Fun Facts Online. Today, we're strapping in for a roller coaster ride through the global economy of 2025. It's a landscape filled with twists, turns, and a whole lot of uncertainty, largely thanks to some major shakeups in global trade and tariff policies. So, what's really going on, and how might it affect everything from global markets to your weekly shopping? First up, let's look at the big picture. Multiple global watchdogs are flashing warning signs about slower economic growth in 2025. The International Monetary Fund, or IMF, projects global growth to dip to 2.8%, down from 3.3% in 2024. Why the slowdown? A big part of it is renewed trade tensions and a general cloud of policy uncertainty. Even more starkly, UNCTAD, that's the United Nations Conference on Trade and Development, signals global growth slowing to just 2.3%. To put that in perspective, that's a rate often seen when the world is teetering on the edge of a recession. It's a significant drop from the kind of growth we were used to before the pandemic. So what's fueling all this nervousness? Economic policy uncertainty has soared to its highest levels this century. Think about that. The most unpredictable economic environment in over 2 decades. This isn't just abstract. It has real-world consequences. Businesses get cautious, they delay investments, and overall sentiment turns gloomy. You might have heard of the Fear Index, officially the VIX. Well, it's also signaling that investors are feeling increasingly uneasy. Now, let's talk about a major headline grabber, tariffs and trade wars. Early 2025 saw the U.S. announce sweeping tariff increases on imports. And we're not talking small changes here. Some of these tariffs are hitting levels not seen since the early 20th century, or even during the Great Depression. Imagine that. These include broad tariffs across many goods, and some really specific, sky-high tariffs on goods from certain countries, like China, where some rates have reportedly climbed to a staggering 125%, or even 145% after clarifications. Naturally, these moves have triggered a wave of retaliatory measures from trading partners, escalating trade tensions globally. The U.S. average effective tariff rate? It's estimated to be way up, possibly around 22.5% to 27%, its highest in over 100 years. What does this mean for folks in the U.S.? Well, get ready for higher prices. The Budget Lab at Yale estimates a short-run price level increase of 2.3% to 2.9%. That translates to an average loss of purchasing power of around $4,700 per household. Ouch. And in the long run, the U.S. economy, its GDP, could be persistently 0.6% smaller. Specific sectors are going to feel this acutely. Think about clothes and textiles. Prices for those items are predicted to jump significantly for consumers. With all these tariffs flying around, it's no surprise that global merchandise trade is expected to take a hit. The World Trade Organization, the WTO, forecasts a 0.2% dip in global trade for 2025. But here's a worrying detail. North American exports are expected to see a much more significant drop of 12.6%. And if tensions escalate further, in a worst-case scenario, that global trade decline could reach 1.5%. Some projections even see global trade growth slowing to just 1.7% in 2025. Interestingly, there was a bit of an uptick in trade in late 2024 and early 2025. Why? It seems businesses were front-loading orders, trying to get goods in before these new hefty tariffs kicked in. This global storm isn't affecting everyone equally. Let's take a quick trip around the world. Starting with the United States, it's expected to see the sharpest slowdown among major developed economies. Growth could hover somewhere between 0% and 0.5%. Those tariffs we talked about? They're projected to shave off about 0.9 percentage points from U.S. GDP growth in 2025. There's even an increased risk of a technical recession, which means a quarter or two of negative growth. Across the pond in the Eurozone, growth is forecast to be modest, somewhere around 0.8% to 1.0%. Germany, Europe's powerhouse, is reportedly near recession, while France and Italy are showing only limited recovery. The direct hit from U.S. tariffs on EU growth might be around 0.2 to 0.4 percentage points. But here's a potential silver lining for Europe. They might actually benefit from lower goods prices as China diverts its exports away from the U.S. Speaking of China, it's also facing a slowdown. Growth is expected to decelerate to around 4.5%. This isn't just due to U.S. tariffs. China is also grappling with a fragile property market, demographic shifts, and other internal factors. Beijing is likely to use fiscal and monetary policy, government spending, and interest rate adjustments to try and cushion some of the blow from tariffs. What about the United Kingdom? Expect positive but constrained growth, around 0.5% to 1%. The UK has less room to maneuver with its policies compared to Europe, mainly due to fiscal constraints and stubbornly sticky inflation. Developing economies are particularly vulnerable. They can be hit hard by trade slowdowns, all this policy uncertainty, and capital flowing out of their markets. The least developed countries are expected to bear the brunt. However, it's not all doom and gloom. There's a growing trend of South-South trade, that's trade between developing nations, and regional economic integration, which could offer some opportunities. And one notable bright spot: India. It remains a rapidly expanding economy, with growth projected around a robust 6 to 7%, largely thanks to strong domestic demand. Let's talk inflation. While the general expectation is for global inflation to decline, it might do so at a slower pace than we'd hoped. And those new tariffs? They're likely to push inflation up, especially in the U.S. This could mean the Federal Reserve, the U.S. central bank, might delay any plans to cut interest rates, keeping borrowing costs higher for longer. All this heightened uncertainty and the new tariffs are shaking up global supply chains. Imagine businesses trying to plan when the rules of the game keep changing. Many are pausing investments, cutting back on spending, and having to completely reassess their strategies. This can lead to a global trade system that's less efficient and, frankly, more confusing and opaque. Financial markets don't like uncertainty, and right now, there's plenty to go around. Increased uncertainty and tightening financial conditions are weighing on economic activity. We could see more severe tests for financial markets, and developing countries, or emerging markets, could be particularly hit by capital outflows as investors seek safer havens. Now, an interesting angle: tariffs are essentially taxes on imported goods, so the U.S. government is projected to raise a significant amount of revenue from these new tariffs. Some estimates are huge. One model projects $5.2 trillion over 10 years, while another suggests $2.4 trillion over the 2026 to 2035 period. However, there's a catch. The negative impact these tariffs have on overall economic growth, the GDP, could cancel out some of these revenue gains. Beyond the immediate bumps, what are the long-term risks? Well, sustained high tariffs and ongoing trade policy uncertainty can put a damper on both short-term and long-term growth prospects. They can reduce competition, which often means less innovation. And they can also increase what economists call rent-seeking behavior. Basically, companies trying to profit through manipulating policy rather than creating value. If international cooperation continues to scale back, it could jeopardize all the progress we've made towards building a more resilient global economy. So, where does this leave us? Analysts are describing the current global economic situation as a critical juncture. It's a time that demands careful attention to these policy shocks and how they ripple across borders. There are strong calls for countries to roll up their sleeves and work constructively towards a trade environment that's stable and predictable. We need more international cooperation, and countries need to address their own domestic economic imbalances to foster greater stability. The good news? Easing the current trade policy tensions and forging new trade agreements could immediately improve growth prospects. Phew! That was a deep dive into the complex world of the 2025 global economy. As we've seen, it's a picture marked by significant headwinds from trade volatility and those new punchy tariff policies. These are dampening growth, stirring up inflation risks and creating a fog of uncertainty for everyone. The path forward really hinges on how these trade tensions play out and whether we can rebuild and strengthen international cooperation. Thanks for tuning in to G Fun Facts Online. We hope this gave you a clearer picture of the economic currents shaping our world. Don't forget to subscribe and join us next time for more fascinating insights. Until then, stay curious.